Welcome everyone for ERICKSON lectures, and kindly feel free to enjoy our session. Now, our session today, I want us to examine the bookkeeping equation, and I want to talk about the bookkeeping equation, how to derive it, and actually the components that make up the bookkeeping equation. And maybe you want to understand more about the components of the bookkeeping equation, I would kindly advise you to click on the link below in our description, where you'll be able to understand more about the components. Now, I will also that an equation is normally made up of many factors to do with arithmetic operation, that is addition and subtraction of some particular figures for that matter. And in this case, we are going to highlight some key accounts from which we will be able to derive the equation as a whole. Now, in all cases we have these particular types of accounts. We could have assets, a business could have liabilities, expenses, and drawings made by the owner of the business. At some point we have revenues and even capital. Now, when we talk about all these types of accounts, these are where the equation lies, and actually we are going to see how do we arrive at the specific type of the equation we are talking about. In normal cases, the owner of the business has something to do with the owner's claim. The owner's claim to the business. This particular type of finance is what the owner of this business takes from his equity. And equity simply means the whole collection of finances that the sole proprietor has in each particular account. Now, whenever the owner takes part of the equity to make part of the owner's equity and add it to it something to do with the retained earnings. And retained earnings simply means those parts of the profits which are held back to be used in the normal operations. Now, when you have the retained earnings, then after paying all the dividends, in other words, of making drawings, whatever this particular type, whatever the owner of the business remains with, will make part of what is known as the owner's equity. The owner's equity. But actually, retained earnings simply means that we have our revenues after deducting all the expenses, because we pay expenses from what we collect as part of our income whenever we are running our businesses. So in this case, you find that the owner's equity is a collective figure arrived at finding out the summation and the additions for all these particular types of figures. Now, owner's equity, now we have owner's equity at our disposal, and I want us to derive another formula. Because we have this equation 1 that giving us owner's equity, again we can have the owner's equity being equal to assets. And actually assets are what, or the items that they are possessed, that are owned in a particular business. So it means your assets, the monetary value attached to these particular assets should be equal to the owner's equity. But at some point, we have things to do with these financial obligations, and we're talking about the liabilities. You will have liabilities to pay. And liability simply means the obligation that you as the owner of the business has to pay, the debts that you have to pay to your creditors. So it means whatever you have, the assets, when you deduct all the liabilities, that is when you pay all your debts, whatever remains still makes part of the owner's equity. And from this one, we have now arrived at our equation, that is the bookkeeping equation. So in all cases, we are supposed to rearrange such that we have a positive figure. When we arrange all these, we are going to have assets should be equal to owner's equity plus liabilities when the terms are arranged. Abbreviated as A is equal to E plus L, that is the owner's equity. And this is the bookkeeping equation.